Hello and welcome to episode 29 of the Craving Crypto podcast. In today's episode, we're going to be talking about whether CNBC is a good counter indicator. So let's get right into this. So, can you really counter trade CNBC fast money? That's what we're going to be talking about today, but before we get into that, let's go over to coinsignals.trade, where we do technical analysis on the total market cap and update the prices. As you guys know, on Tuesday, I was talking about how a minor correction would happen. We got this correction. It actually bled out a little bit further than I originally expected it to. Got stopped out of some of my Bitcoin positions in profit. Now I'm just waiting for some confirmation to get back in. Of course, all of my long-term positions I keep and I hold through this type of movement, but some of my short-term trades did get stopped out. Thankfully, I used trailing stop losses, so they were already set to be in profit. So if I get stopped out, I actually still make a gain. Now, this is a great little example of a rising wedge pattern that happened on a smaller time frame. So if we zoom in right here, you can see that we had a very, very clear rising wedge pattern. Now, with the rising wedge pattern, you can get a target based on the pattern. So you can actually draw the pattern. Let me just make this yellow so it's a little easier to see. You can draw the rising wedge pattern. And again, that means that the prices are rallying up into a smaller and smaller area until they finally get rejected and have no more sustainable growth. And that actually happened right at this resistance level, or this resistance zone, because resistance and support are generally speaking zones, and you should treat them as zones and not exact prices. So we got rejected off of this resistance zone right here, and we've seen, of course, the market drop back down to the $200 billion levels. Now you can actually measure the width of the rising wedge if you go from the top to the bottom and place it on top of the point that it breaks below. When it breaks down, that will give you your first target. Often they overperform these targets. As you can see, we about doubled the length of this target, but your first real target for the rising wedge would have been around 220 billion, which is what I was telling my VIP members and letting them know that I was expecting some type of drop towards that area. And again, of course, we dropped a little bit further, but due to the fact that we have stop losses, nobody's panicking right now. So let's just go ahead and zoom back out into the weekly candlesticks and talk about what's happening in the bigger picture, because it's actually kind of goes along with what's happening in the smaller picture. As you guys know, we just found that rising wedge pattern. Now, the opposite of a rising wedge pattern is what's called a falling wedge pattern. And a falling wedge pattern is created when you have prices get squeezed into a smaller and smaller area. You know, some people might say squeezed. I don't know exactly the proper terminology in this case, but either way, you have a consolidation range and the volatility gets less and less as the price drops further and further inside of that range. Now, this is what happened in the 2014 to 2015 Bitcoin bear market, when Bitcoin hit $1,200 and then Mt. Gox got hacked and it fell all the way back down to about $150. Now, at these $150 levels is actually when I started getting into Bitcoin, when my little brother started telling me about it, and where I started accumulating it myself. And then, as you can see, we got a nice ascending triangle pattern, a breakout. The market cap hit previous resistance, got rejected a little bit, but really was not that big of a rejection. And then we had a really, really nice rally all the way up to the $800 billion levels. Now, we're making that same falling wedge pattern that we made in the 2014 to 2015 correction. And we're actually nearing a point where we're getting really, really close that has a potential to see a bullish reversal here. Now, as the volatility gets less and less, that means that there's less and less time left for this actually to make a decisive move, either up or down, because technically a falling wedge can break down and see further downside if this green support, the downward pointing support level, fails. Now, due to the fact that it is a falling wedge, it's a bullish bias pattern. So we're expecting this pattern to result in bullish action, but just how a rising wedge can get broken out of and see further upside, like we saw right here in the market cap between the $108 billion levels and the $138 billion levels, this could also break down and see further downside. I'm not betting my money on that. I've been accumulating this, and the main reason for that is because even if we did see a further break on the downside, it would be pretty short-lived. So for my long-term stuff, I would hold through that. My short-term stuff, I'd take a lot of risk off the table at that support failure, but I really don't see that as a likely scenario. Either way, as I was saying, as you get further and further in the consolidation range, the volatility gets less and less and less, and as the volatility decreases, you have a higher probability of a breakout, either an upside breakout or a downside breakout. Now, we've corrected really hard since the beginning of the year. There's really only about 60 real days that we have left in this wedge before the volatility would just be so ridiculously low that we would get a decisive break. Obviously, technically speaking, it's like 80 days to the very bottom of these lines, but around in this range, the volatility would be at such a low point that it would have to make a decisive move. Now, as you can see, this is an A and a B, C correction. So we're just waiting for the bottom of that C wave to be found. It could be at current prices. Who knows? Maybe we do not drop below the $200 billion levels in total market cap, or we could go test this lower level at the $170 billion range in the total market cap. So it's really just about watching this, accumulating the big picture moves, and then any of your short-term trading, you have to just use your stop loss and have your target in place so that you get out of the market if we see some type of panic result out of this. So either way, things are still looking really good, and the market is behaving as expected. So there's no real reason to be freaking out over the price action. This is very usual type of movement. So headed over to coinmarketcap.com. We have about $17 billion in 24-hour volume. And again, that total market cap is right around the $200 billion level. Across the board, we're mainly seeing blood right now, but we are getting a nice little bounce. So CNBC fast money, can you really use it as a counter indicator? This has been talked about a lot recently because there's a TradingView post, and I'll go ahead and show this and share this because this guy really does deserve to be shouted out. You can tell he spent a lot of time making this chart, and he did a really good job doing so. I really appreciate his work, and I'm thankful for it. If you go ahead and click right here, it's also provided in the document, which is always in the video description. You can see clearly that he's labeled each time that CNBC tweets or makes a headline somewhere that says, hey, this is either going to go up or this is going to go down. Now, if you notice that every single time they say it's going to go up, it drops, and every single time they say that it's going to go down, it pumps. And generally speaking, this has around a 95% accuracy, or at least that's what we can map out for CNBC. And this is really, really similar to what I've always preached. I've always said, do not trade news. They're trying to design it to get you to do the wrong thing, because these news sources can capitalize off liquidity off of a lot of people that don't know what they're doing. So if they say, hey, this is really, really going to pump, and then everybody goes and puts long positions on, they're sitting there and they're shorting because $50 million worth of longs just got added, so they have plenty of liquidity to short the market and then have a support failure and make a bunch of profits. So it's really screwed up, but I've warned really since the beginning of my channel that this is the way that news works. I do not trade news. I avoid trading news. But an interesting concept is to trade against news or counter trade news, and that's what this guy has made here. So this is made by I Love Crypto. So again, shout out to him. His TradingView name is Jacob Canfield. But let's get into the details as to whether this is useful today or not, because a lot of people have been asking me whether you can do this. I personally do not counter trade CNBC, but I'm not against the idea, especially if you can get it to work for yourself. And we've seen a really good accuracy in the past since this. So as you can see, look at this. He even said right here, buckle in because this is the biggest Bitcoin news of the year. And then look, Bitcoin dropped from 7,500 all the way back down to 59. And then look what they're saying right here at this kind of panic area. Look, should we have another Bitcoin funeral? Bitcoin bulls beware. Former PayPal CEO Bill Harris calls crypto a cult and says that it's headed straight to zero. So they just start flooding the market at all of these low points, and then of course the price pumps and rallies. Now what they've done recently, just today actually, we'll just head over to Twitter and check this out. They posted another chart, and so this is why I actually am not currently taking short positions on the market until we have a little bit of a support failure. I've taken some profits off the table and I've reduced my risk due to this panic, but I'm not actually trying to short it because this could result in some type of a bullish reaction. Even though my primary prediction is that we just drop a tiny bit lower right now before bouncing back up. CNBC. We might, due to the counter indicator, we might actually find support right here. So this is another reason I really focus on playing the bigger cycles, as these little swings have so many variables involved that it can be a little bit of a pain to determine exactly what the best decision to do on the short term. Are investors falling all out of love with Bitcoin? So right here, they're saying, oh no, we've got a broken heart. Bitcoin has dropped a bunch. And by the way, the last time that they did this post was right before we rallied up to the $8,000 levels that I had been talking about and predicting. So it matched right along with my technical analysis. Right now I do have a little bit of a mismatch in my TA versus this counter indicator. But that's again another reason why I'm not trying to play this volatility currently. I'm waiting a couple days for some type of confirmation to either load back into my long positions or aim for a little bit of a short. But either way, this is looking pretty good for the bulls. I'm not gonna lie, with CNBC coming out and saying we're all out of love again, just like they did back here, and it started to rally. But so yeah, either way, if you can get this to work for you, I think that's really awesome. I haven't done it too much myself, but I have mentioned in the past that CNBC is somebody you really don't want to trust.
Got CNBC fast money. Hat. These dudes told you to buy Ripple at the top and sell the bottom.
You could obviously trade against news, although I don't recommend trading with news, otherwise you'll get wrecked the whole way 95% of the time like we just saw. So that's kind of how I see this. I think it's really awesome that that kind of occurred, and it's just a great example of do not listen to mass media, only trust yourself, learn how to actually trade, and then apply it properly, because that's who's making the real money, are the real traders. Mass media, who knows what they're doing? Maybe they're actually doing what they say they're doing, but more than likely, if they're telling everybody to go long, I would not be at all surprised if they're taking short positions right then and there as they make those calls. So, you know, just don't trust them at all is basically what I'm saying. So if you really like this video, then go ahead and hit that like button, hit that subscribe button. I've got the Coinigy sign up if you want to do technical analysis on altcoins and ones that you cannot find on TradingView. We've got BitMEX sign up right here, the Bitcoin address. If you like what I'm doing, you can go ahead and send me donations there. The VIP course if you want to get more hands-on and learn this stuff deeper. And then the Discord chat is back, and you can join the free channel and look around in there and be talking with people. We've also got one broker if you want to do stock trading with leverage with your Bitcoin. Hey, thank you so much for tuning in today's video. I hope that you learned something. If you have any questions, go ahead and drop them in the box below. Hit that like button, hit that subscribe button, and I will see you guys in the next video. As always, stay profitable out there.